Hello everyone. Today we are going to talk about controlling function as a function of management. So controlling function, this is the function of management which entails verifying and ensuring that every planning activity or activity the organization is undertaking is in line with the standards that we are trying to portray. So it ensures or consists of verifying and ensuring that everything occurs in conformity with the plans adopted, that everything is in line with the plans that we set out to undertake, plans adopted. The plans adopted, that if in any case there is deviation from this plan, we can explain it as to the given reasons. And then instructions issued, and the principles established, So this function of management is such that it seeks to understand if there is a deviation from the plans that have been adopted and the instructions that have been issued. So the control process, or the process of trying to figure out if there's a deviation from the adopted plans, starts with setting standards. So setting of standards expected of the performance level, For instance, if we set standards for, in this month, we want to make sales amounting to, let's say, 2,000 units. So these are the standards that we hope to achieve. And then we measure the actual performance, Like for instance, if this month, the number of sales that we made were amounting to 1,500, so we compare this actual performance with the standards or the performance standards that we set. So compare the actual performance against the standards and identify the deviations, Like for instance, the difference between the performance standards we set for our company and this actual performance in our example will be, say, the 500 deficit. So you evaluate the results of this deviation, evaluate the results, and take corrective action, that we try and figure out why is it that we have this deficit of 500 units. Corrective action. So the corrective action we may institute is probably we come up with better branding or packaging ways to make sure that we sell more or in line with the performance standards that we set. So this is the control process that an institution may have in an organization, or an institution may put in place. So what are some of the importances of having such controls? Importance of controls in an organization. So what these controls do is they help in identifying or detecting errors and frauds. So control prevents accumulation of frauds, accumulation of errors, and detect also frauds. So from instituting controls in our organization, we'll be able to detect frauds and errors. Also, they facilitate coordination that through setting these performance standards and coming up with ways to try and achieve them, we will have that cohesiveness of the organization. And then another one is it facilitates organizational efficiency, and effectiveness, that through these controls, we can have efficiency in an organization, that things can run smoothly in an organization. And then it also improves communication in the organization. Improves communication in an organization. That we can better communicate ideas due to the institution of controls and ways of governing or trying to estimate our expected performance in line with what we are doing. And then it can be used as an evaluation tool to assess performance of individuals. It also has a positive psychological impact on employees. Positive psychological impact on employees, that employees now have a clear criteria on how to conduct their activities. Positive psychological impact on employees. And controls ensure timely completion of tasks. That these controls, they ensure that the tasks that we have been given to complete, we are doing them in line with the time periods that they're supposed to be done. So some of the characteristics of an effective good or a good control system, characteristics of an effective control system. So these are some of the attributes that an effective control system should have. So one of the attributes is that the control system should be goal-oriented, in that it should be geared towards certain goals and objectives. Another one, it should be acceptable, that the employees who use it to not resist to its implementation. And then another one is that it should be objective and free from bias. So by objectivity, we mean free from bias. So one is goal-oriented, designed to, what we mean by this is designed to achieve specific goals. And then also accuracy to provide accurate information. The control system should provide accurate information. And by providing accurate information, it will help us in preventing accumulation of errors and frauds. Another one is objectivity, that it should be free from bias, any bias. It should not lean towards any biasness, or should be fair. So should be fair. And then another one is cost effective. By cost effective, we mean that its implementation and maintenance should be cost effective, in that it should not be of high costs, and the benefits should outweigh the costs. That benefits to outweigh the costs. Another one is acceptability, that it should be acceptable by the employees, acceptable by members, by organizational members. And then another one is timeliness. It should provide results in a timely manner. Timeliness should provide feedback on time. Feedback on time. And then another attribute of a good effective control system is that it should be forward-looking, that is forward-looking. So it should consider its implications on the future of the organization. So it should be future-oriented. That is what we mean, that future-oriented. Take into account the future of the organization. So some of the defective controls that we may have in an institution, defective controls, or those controls that may, or symptoms of an inadequate control, is that what shows us that we have defective controls. One is that if we have, so these are symptoms also of defective control, symptoms of inadequate controls. That if an organization, for instance, has loss in revenue, one, unexplained decline in revenue, So if we have an unexplained decline in revenue, it means that there are some controls we have not instituted in our organization, and we cannot attribute this loss in revenue to a specific aspect of the organization. And then another one is degradation of services. That an increase in customers' complaints will be an indicator of inadequate controls. Increase in customer complaints. That if customers complain about our services, we will know that our controls are inefficient or are inadequate. And also idle facilities and personnel. that we are not utilizing these people or the facilities that we have to the best of their abilities or capabilities. And then excessive costs also. If you are incurring too much cost, it means that some of the controls that you have put in place are not working, and evidence of waste and inefficiency. Evidence of waste and inefficiency. Wastage of resources and inefficiency. Inefficiency. So these are some of the indicators of an inadequate control, but one may confuse planning with control, but these two are different kinds of functions, and we are going to look at the differences between the two that differentiate planning and controlling as a function. So one of the difference is that planning is deciding in the present what is to be done in the future, while controlling, it is just keeping an eye on the performance level in terms of the control process that we are looking at. So this can be presented in a tabular form, that we have planning and also control. So the differences between these two, for planning, it is deciding in the present what is to be done in the future. What is to be done in future. While for control, this is measuring results and checking them against the previously agreed standards. So the process of managing, it rounds off the process of managing organizational resources by measuring results and checking them against agreed standards That this is what we are saying is the control process, that we measure the results and check them against the agreed standards. So the other one is planning is a decision-making activity. This is a decision-making activity. While for controlling, this is a monetary process. This is a monetary process, that you monitor the results and check them against the agreed standards that you have set in place. And then planning uses estimates. Planning uses estimates. That in coming up with a plan, you can only estimate as to the kind of, let's say, costs you're going to incur. And then controlling places more reliance on measured data from specific area. So controlling places more emphasis or places more reliance on measured data from specific areas, That for controlling, you have to measure data from these areas that you wanted to check against the standards you put in place. And then another one is that planning is less structured. That it does not involve many structures in coming up with it is less structured, while for controlling is highly structured. Controlling is highly structured, highly structured, highly structured, highly structured. So, and then planning, this one is required at the very onset of management, is required at the very onset of management, or the very onset of management, at the start of the management process, onset of management. Because as we know, planning is the primary function of management. And then for control, this is required at the last stages, required at the last stages. At the last stages. That this one is more of a monetary process that we counter-check the actual results against the agreed standards that we put in place. So these are some of the differences we have between planning and controlling. But also, there are some of these aspects of planning and controlling that have similarities. So the similarities between the two, between planning and controlling, include: one is that both are concerned with identifying and quantifying standards of performance. Both are concerned with identifying and quantifying standards of performance. Standards of performance. So both are concerned with identifying these standards of performance, and then the measures used for planning purposes are frequently used by the controlling purposes. For instance, targets. So methods used in both are similar. For instance, setting of targets. In coming up with a plan, you set targets, and in controlling, you set this performance standards. It's more or less the same. Are similar, e.g., targets or standards, targets. And then another one is that controlling and planning are highly interconnected. So they are interconnected that, for instance, if we institute a plan, in carrying out the plan in itself, we are going to counter-check the results of that plan with using the controlling measures that we have put in place. And then another one is they both make use of quantitative tools. Both make use of quantitative tools. That in trying to quantify these results, they make use of the quantitative tools. So then those are some of the similarities between planning and controlling. But then what are some of the types of controls that we have as an organization? So we have different types of controls that we can use as an organization in trying to understand the deviations from the set performance standards. So some of these controls may include feedback controls, and then this feedback, they are also called the after the fact control. Also the feed forward, these ones are preventive in nature and they are instituted before an action occurs. And lastly will be concurrent controls. So types of controls, controls. So you have feedback controls. So these ones, they are after the fact control, that after an action has been done, these are the controls that have been instituted after the fact control, also known as after the fact control, that it provides feedback about a process that has been completed. So it provides feedback about a process that has been completed, feedback about a process. That has been completed. So this is after this process has been completed. And then for feed forward, these ones are the controls that are preventive in nature or before an action occurs, feed forward controls. So this is control that is exercised in the input stage of the process, 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 where the manager anticipates problems that may arise, where a manager anticipates problems that may arise, anticipate problems that may arise and tries to mitigate them. That may arise and mitigates them, and formulates mitigating measures. Formulates mitigating measures. So for instance, if the manager suspects that an organization may be robbed, he may institute or put CCTV cameras. That is a kind of a feed-forward control that is preventive in nature. And then concurrent controls. These are controls that are put in place on an ongoing basis. These are controls on an ongoing basis. That as circumstances occur, we institute more and more controls, ongoing basis. So these are types of controls that we have. Also, I want us to look at cybernetic controls. Cybernetic controls. So for cybernetic controls, this is a control system that uses a self-regulation mechanism. So uses a self-regulation mechanism. And its main or strong aspect is that it has a strong feedback mechanism. And it has a strong feedback mechanism, So this is the main attribute of the cybernetic control system or cybernetic controls. So cybernetic control involves a self-correcting feedback loop, which has 4 vital elements. And these 4 vital elements, of this cybernetic control include, it's more or less this process that you are saying on the control process. One is existence of an agreed upon standard, existence of an agreed upon standard. Also, 2, existence of a means of measuring the process of output, existence of a means of measuring the process of output, And then from measuring this process output, there should exist a means of identifying and reporting variances, existence of a means of identifying and reporting variances, Also, another one is that a means of taking corrective action, that it should have a means of taking corrective action, So as I was saying, this is more or less the same as the control process that we have looked at, corrective action. And so it entails coming up with an agreed upon standard, and then existence of a means of measuring the process output, and then existence of a means of identifying and reporting variances, and then a means of taking corrective action when you have identified these variances. And then another control is now non-cybernetic control. So this one relies on human intuition. For instance, the human aspect of a manager. So it's a control system that relies on human discretion. So relies on human discretion. Unlike this cybernetic controls discretion. So this one, it is influenced by things to do with intuition, judgment, intuition, judgment, intuition, judgment, and the like. Intuition, judgment, and the like. So this is the aspect of non-cybernetic controls that relies on human discretion. And then some of the control techniques or tools that we use in trying to measure these deviations or finding reasons for this deviation from the agreed upon standards may include use of budgetary controls, also ratio analysis, and then break-even analysis, So control techniques or tools. One is budgetary controls. That we come up with specific budgets to try and control our expenditure, like for instance, fixed or flexible budgets. And then another one is ratio analysis, that we use certain ratios to indicate performance on how our organization is doing. Like for instance, the current ratio, to use the current assets over current liabilities. And then also break-even analysis, to know when we make profits, and then the number of units we need to sell so as to make profits, and the amount of money we can consider to have made profit from. And then project evaluation and review techniques, otherwise known as PAT, project evaluation and review techniques. Otherwise known as PAT, acronym of PAT, and then or critical path method and critical path method. In short, or an acronym is CPM. So these are some of the tools we can use in trying to find those deviations in the standards and our actual measures. And then performance appraisal. Now this one is evaluating an employee's performance to see if there is underperformance. Also, benchmarking. This is looking at an organization or a department that is doing far much better than you. And then balance scorecard. This is taking into account the different perspectives of the organization. For instance, the financial perspective and the learning growth perspective. And then financial and accounting controls, and accounting controls. And accounting controls. And lastly, rules and regulations. Having rules and regulations in an organization. Rules and regulations. Rules and regulations. So, and then using this budgetary planning and controls, we can have different types of budgets we use in an organization. So we are saying these are some of the control techniques we can use or tools we can use to try and measure the deviations of the organization. And then now we can make use of the budgetary controls that we are saying. Budgetary controls or budgetary and planning controls, budgetary and planning controls. So budgetary planning and control. So a budget, we will define a budget. So a budget is a quantitative expression of a plan of action prepared in advance for the period to which it relates. So it's a quantitative expression of a plan, of action prepared in advance, plan of action prepared in advance. Prepared in advance of the period to which it relates, So it's coming up of how best you can actualize this plan for the period that has not yet arrived, of the period it relates, before it actually even happens. So you budget for it. And then, so budgetary control, on the other hand, budgetary control. This one, so for budgetary control, it's a system of controlling costs and other quantifiable aspects of operations, which includes the preparation of budgets. So is coming up with a system, is a system of controlling costs, and other quantifiable aspects of, of operations, which include preparation of budgets, preparation of budgets. So the process of budgetary control is more or less the process of the control process that we are saying. So process of budgetary control, it has some similarity to the control process that you are saying, because first of all, you establish a budget target, So for this one, it's coming up with the target that this budget, we are budgeting for this amount of expenditure for this year. And then another one is recording the actual performance, And then compare the actual performance with the budget target. Compare the actual performance with the budget target. The budget target. And then calculate the difference and analyze the reasons for them. So you calculate the difference between these two, calculate the difference or the variance, the difference, and analyze the reasons for them, the reasons for them. So if you take a keen look on this process of budgetary control, it's more or less the control process that we were saying in the first instance. So what are some of the advantages of having this budgetary control? Advantages of budgetary control. So one is that budgeting compels managers to think ahead by formalizing their responsibilities. Also, budgeting coordinates activities. So it helps in coordinates activities. And then it increases production efficiency, that through these budgets, we can come up with ways on which we don't move out of the budget target that we set, increase production efficiency. Also, budgeting helps in external financing, that we can present these budgets to seek credit facilities. That budgeting for instance, seeking of loan aids in making arrangements for external, external financing. So for instance, if you want to seek out a loan, we can use the budgets to seek for the loan amounting to that budgeted amount for external financing or a debt. And then it assists in delegation of authority, And then another one, it pinpoints the efficiency or lack of it. It pinpoints efficiency or lack of it, that it shows the efficiency we have in our systems or our operations or lack of it. And then motivates executives to attain their goals. So motivates employees, executive to attain their goals. And then another one is it directs capital expenditure in the most profitable way. So those are some of the advantages of having a budgetary control system or instituting budgetary control in an organization. So Another part, so what are some of the limitations that you may encounter in coming up with a budgetary control system? Limitations of budgetary control system. One is that the budget plan is based on estimates. Budget plan, it may be based on estimates. Is based on estimates. That the figures that we use in coming up with a budget, they are mostly estimates and not actual or specific figures. And then there's that danger of rigidity. Like for instance, if we come up with a fixed budget, so a fixed budget is one that does not change over time. So there's that aspect of rigidity, that a budget may create rigidity as organizational members strictly strive to operate within the budget. And then it is expensive. It's an expensive technique. It's an expensive technique. That this budgetary control system that we use, or the budgets that we come up with, we have to engage the employees and also carry out or use resources in formulating a usable budget. So then, what are some of the types of budgets that we may have in an organization? Types of budgets that we may have in an organization. So for instance, we have fixed budgets. That one is the one I was telling you that it does not change and it is constant. Fixed budget that it is designed to remain unchanged irrespective of the volume of output. It is designed to remain unchanged regardless of the volume of output. So if you are making more sales or not, the fixed budget does not change regardless of output, regardless of the volume of output or volume of output. That it is not affected by the volume of output. And then another one is flexible budget. Now, flexible is the opposite of a fixed, in that it differs according to the volume of output that we have. So for a flexible budget, it is designed to adjust the permitted costs levels to suit the level of activity actually attained. So it is designed to adjust the permitted costs levels to suit the level of activity, that is actually attained, the level of activity that has been attained. So this is the difference between these two, that for fixed, it doesn't change regardless of the volume of output, and for flexible, it adjusts the cost levels to the level of activity that has been actually attained. And then another budget is functional budget. So these are budgets designed with line of the functional departments that we have. Like for instance, we may have a sales budget. We may also have a raw material usage budget, production budget, and the like. So it relates to the function. So budgets that relates to the functions of the business, function of the business. For instance, sales budget of the functions of the business. Functions of the business. Functions of the business. One, we may have sales budget. So examples include sales budget, production budgets, production budgets, raw material usage budget, So these ones, they are in line with the functional departments of the organization, and they are all summarized into one master budget. That we come up with one budget that includes all these mini budgets that we have taken into account. So another form of budget is incremental budgeting. So this one is taking the year's data, previous year data, and subjecting it to an incremental change, for instance, a percentage increase. So this is involves using prior year data, and increasing the budget allocations for the new year, and increasing the budget allocation, for a new year, and this is based on a more of a percentage increase. So they may be based on specific parameters, or a percentage increase may be based on specific parameters. Or percentage increase. And then the last kind of budgeting is zero-based budgeting. And it's a technique that involves justifying every item of expenditure. It's a technique that involves justifying every item of expenditure. So those are the different types of budgets that we have in an organization, and they include fixed, flexible, functional, incremental budgets, and incremental budgeting. This is incremental budgeting, and zero-based budgeting. So we have looked at controlling function of the management, which involves measuring the actual performance in line with the performance standards, measuring the actual performance and comparing it to the performance standards. And then from that, you look for deviations. And the ways to correct that deviation. So that is it on controlling as a function of management.